After nearly an 8-month hiatus, longtime Tesla bull Cathie Wood bought the dip when Tesla stocks were plummeting. Since the slow recent climb of the stock back into the positives, Wood declared her optimism about how Tesla's share price will do this year. At a target price of $3,000, Wood has stated that Tesla stock will go 3 times from here. What are her reasons to support this prediction? How is Tesla faring with the current rise in competition? Do other experts and analysts agree or disagree with Wood? Keep watching to find out. Recently, exchange-traded funds managed by Cathie Wood's ARK investment purchased 33,482 shares of Tesla. The shares had finished at $829.10 at the time of purchase, down by 11.6%. Wood paid an estimated $27.76 million for the shares at that price. The star stock picker and noted Tesla Incorporated bull took advantage of a drop in the electric car maker's stock following its results, piling into the stock after months of reducing holdings. This was the first Tesla funds the company had bought since the recent sell-off after the stock price had reached an all-time high. We believe these actions speak loudly of a renewed faith in the stock price and Wood's view of what's to come this year. And it had been about 8 months since the firm had bought new shares of the brand. Cathie Wood is well known for her strategy on focusing on the future when it comes to picking stocks. Her investment company, ARK Invest, boasts shares in companies such as Coinbase, DraftKings, Roku, Block, Teladoc Health, Tesla, and Zoom Video. Wood stated that traditional investment tactics frequently underprice disruptive innovation because people may not realize how large the ultimate opportunity will be. They're not sizing up the opportunity or understanding the disruption. That said, Wood raised her target price to $3,000, which is 3 times what the stock was going for last year. In a debate against Rob Arnott, who has been very wary of high-priced growth stocks like Tesla, Wood said, "My guess is that if nothing changed in our outlook and we got to $3,000 next year, we'd be peeling out of it." Very optimistic numbers in our opinion. So let's look at the current situation. After a long period of decline in Tesla's stock price, even before the very impressive fourth quarter of 2021 earnings call, Tesla's stock is finally climbing into the positive. Several analysts and investors expected exactly the opposite. They expected a rise in value after the stunning report of the fourth quarter of 2021, but the stock declined even further. Investors started selling off their stocks as well, as they feared the rate hike the Federal Reserve planned on implementing driving the value of the stock even lower. Truth be told, it's been a rocky year so far, across the board for all stocks, particularly for growth stocks. Most predictions are shaky at best. So what exactly are the chances of Wood's prediction coming true? When asked to explain why she believes Tesla will go 3 times this year, Wood mentioned the price drops in battery pack systems as well as the benefits of electric vehicles, such as the fact that she hasn't had to travel to a petrol station since September 2018. She anticipates the average price of an electric vehicle will fall below that of a gas-powered automobile in the next year as a result of such decreases. That trend is expected to continue until 2025, when the average electric vehicle will cost around $18,000 compared to $25,000 or $26,000 for a normal gasoline vehicle. We're with Wood on this one, as Tesla seems to be making leaps and bounds in this particular area. It came out recently that Panasonic might begin mass production of the higher capacity Tesla batteries as early as next year. The 4680 cell is expected to increase the range of the electric vehicles by more than 15%. According to Nikkei, this could increase the Model S's range from 650 kilometers to 750 kilometers on a single charge. Nikkei also stated the battery is twice as large as earlier generations, yet it boasts a 5-fold increase in energy capacity. As a result, automobiles will require less batteries, which are currently 10 to 20% less expensive to manufacture. Batteries are anticipated to account for 30% of the cost of electric vehicles, so a cost reduction might make electric vehicles more affordable and speed the shift to electric vehicles. Panasonic, a longtime Tesla collaborator, is said to be spending roughly 80 billion yen, which is approximately $704 million, on new equipment to manufacture the 4680. It's rumored that it'll be expanding an existing plant in Japan and producing the batteries there first. According to Nikkei, the company will begin small-scale manufacture of the cells this year in order to develop the safe and efficient process before going into large-scale production in 2023. It is possible that the batteries will be mass-produced in other countries in the future. The company acknowledged to Reuters that it will build up a test manufacturing line in 2022, but it did not disclose when it would begin mass production of the batteries. Tesla's pioneer status on this front is sure to affect the market sentiment and therefore affect its valuation on the stock market. However, this may not last for long. Although Panasonic began developing the cell following a request from Tesla, Panasonic's head of the battery division stated that the company hasn't ruled out making the cell for other automakers, even though Tesla is the company's top focus. We're still optimistic about Tesla being ahead, as Elon Musk has previously stated that Tesla intends to manufacture its own batteries. Battery technology aside, the more progress Tesla continues to make, the more market sentiment shifts to positive values. With the first quarter of the 2022 earnings call coming up, we believe this shift will be even greater, as experts have pointed out that with the amount of deliveries this year, Tesla is sure to have a good Q1 report. What do analysts think of Wood's target price? Do they believe Tesla will go 3 times like Cathie Wood has stated? Analysts seem to agree with the popular investors' forecast, pointing out that Tesla's market dominance and potential growth will likely remain unmatched by a slew of competitors vying for its position. Noah Hammond, the CEO of AdvisorShares, who recently purchased $1.8 million in Tesla stock, stated that Tesla has a lot going for them and no genuine competitors. Tesla's haste to strengthen up its infotainment offerings, which just added TikTok and Sonic the Hedgehog game, as well as the impending rollout of Starlink satellite internet, will improve features and margins dramatically, according to Hammond. This, together with plans to dramatically increase production and maybe introduce a smartphone, should rocket the stock over $3,000 by 2026-2027. Hammond stated that in 5 years, Tesla will have significant subscription services similar to Netflix or Disney+, in addition to the launch of Starlink, autonomous driving, and even insurance products. This will put them miles ahead of the competition. According to Center for Financial Research and Analysis analyst Garrett Nelson, Tesla's stock can quadruple in 5 years if Musk continues to execute effectively. He added that a lot of things have to go right, but if you look at their guidance, they're expecting a 50% annual rise in auto sales over the next decade, aided by new Texas and Berlin factories, so there's plenty of room for development. Other analysts are more skeptical though. According to Owanda analyst Ed Moya, Woods and other Super Bowl-priced estimates are overhyped. According to him, they may be curtailed soon because U.S. Senator Joe Manchin recently rejected President Joe Biden's Build Back Better plan to boost green energy adoption, delaying and killing the legislation. Moya makes his point saying, Cathie got caught up in the electric vehicle market excitement, but I believe her price objective as well as many others will be cut after Manchin's Grinch-like gesture, which might result in $2 trillion in investment losses combined with a few rate hikes. It creates an unfavorable climate for riskier assets. Moya also poured cold water on Tesla's autonomous or full self-driving service, claiming that it will not be completely operational as rapidly as some have predicted. He said, I expect delays when it comes to full self-driving or autopilot. To begin with, there will be significant regulatory challenges. Elon Musk has declared his confidence on that matter though. During Tesla's fourth quarter 2021 earnings call, he expressed confidence that the company's full self-driving suite will be completed by 2022. People aren't yet aware of how advantageous a self-driving automobile will be, Musk said, after which he expressed his confidence in his prognosis, noting that if Tesla does not achieve full self-driving by the end of the year, he'll be shocked. While we'd love to share his confidence, he has a history of making promises and not delivering within the time frame initially mentioned. If Tesla can pull off managing full self-driving technology this year, along with the battery technology, and give a stellar first quarter earnings call report, we believe Tesla's stock price should very well skyrocket. However, the question if the price will go up 3 times this year, we're a bit skeptical on that front. Will Cathie Wood's prediction come true? What do you think Tesla's first quarter earnings call report will look like? Comment down below.